So good afternoon, everyone. I'm your host, Shivam Sareen. Thanks for joining in. Today, we have with us Jaya Vaidhyanathan. She's currently the CEO of BCT Digital, spearheading the Make Local Go Global product innovation to tackle national issues such as NPA and risk management in the financial services sector. Jaya has extensive experience in BFSI sector across US, UK, South Africa, and India. She currently also serves as the independent director on the board of UTI Asset Management Company and is the member of the risk committee as well. So welcome, Jaya. Welcome to the session.
Thank you. It's a pleasure to be here.
Great. So today we'll be talking about innovation in regulatory tech, regulatory and compliance tech, which is one of the categories that we have for NASSCOM India FinTech Awards. Before we go on to the questions, and we'll discuss a lot of themes related to the topic. But I'll request Jaya just to share her story, share how she's seen her company grow, as well as how she has in her personal capacity seen how things have changed in regulatory and compliance as a sector.
Sure. Shivam, I did start with a background in investment banking, a Wall Street based analyst, and then worked by accident in various technology capacities, came to Accenture, went back to a bank. And having that experience across continents, as you mentioned, I did want to come back to home country, India, and also look at what are some fundamental issues that we continue to rely on for global products, which don't really suit the Indian mindset or Indian issues. So with that in mind, I wanted to kind of deep dive a little bit on issues plaguing our Indian economy. One of that happened to be the issue of NPAs. NPAs is not just an India issue, it's a worldwide issue. But in India, it happens because of, worldwide again, it happens because of two reasons. One is willingness to pay and the ability to pay. COVID, for example, has influenced ability to pay. But willingness to pay was the reason for some of the largest scams. And that kind of drained a lot of the public money and trust in our system. So we needed to look at it from a cultural lens as to what was causing that and address the fundamental issues of how we tackle that. So a product made in India for India to kind of identify some of the systemic issues in our system. And then with that, we moved on to more products similar to that. And that's my India, made in India, make it local, take it global kind of story, because it's now there in 20 countries.
Great. And I think that's actually inspiring for a lot of founders, specifically in compliance, because I think what ends up happening is founders a lot of times see that, they would have to stick to a country, or maybe, they have to first work on one region, and maybe going global becomes very difficult in such cases. But I think this is inspiring that you're working in 20 countries across the board, and obviously hundreds of clients in that as well. So Jaya, we'll go on to some of the themes that would be relevant for this sector and for the founders that have joined us. So now in general, what we take as regulations or compliance is that you have to stick to the rules, right? But then how do you figure out that how can you innovate within this area, or how can you think out of the box when it comes to compliances and regulations?
So I think technology has brought a very interesting paradigm to all our different aspects of our life. I'll come to regulation in just a minute. But if you look at the mere process of buying something, right, retail, you go in, you take something, you pay money, and then you come back. That's a boring activity. But when you look at it in terms of technology, the kind of revolution it's brought in terms of what you do, just go and get a haircut. It's a boring exercise you do every month. But imagine you go in and they tell you, this is how you're going to look with different hairstyles, and that's what it's going to bring in. And then you can choose and spot and say, that's what I want. That brings in an element of coolness to the whole journey. And when you look at that, gives you different data points on how you look like with a different hairstyle, and that's going to work for me or not. So take that paradigm shift and look at it with a view of technology. I'm going to extrapolate a little bit. Matrimonial, typically how it happens in India, you kind of say, I want ABC girl of this kind of parameters, and then there's a horoscope match, and it's a boring prospect. But when you bring technology into it, it does a whole lot of data points, both from, both sides. You have a lot of data points you can play with, and then it's easier to kind of work with it. Same thing with regulation. It is more about what's the kind of data that you use, and how do you kind of make that relevant to me? For instance, in the traditional parlance, before advent of technology, there was still credit monitoring. There was still regulations said, tell me if there's diversion of funds. But most often you reported diversion of funds after the money had left the coop. And then you're still working for years trying to extradite, kind of pass on, figure out where the money went and go after the trail. And that's still regulation, that's still compliance. Whereas if you can in real time, as soon as you set up a beneficiary, go into the realm of all the public data that's available, figure out if they're in one of the blacklisted companies, have they been frequently management audited? What are people talking about this company? Have the directors dumped shares? Or have they had frequent change of directors? And then you have an alerting mechanism that says something based on the pattern tells me with a great degree of certainty that this is a diversion that's about to happen, and you can stop that. That's when things get exciting. So I think it's more about what technology is done in terms of the data it processes, in terms of the rules it adapts to, and in terms of the algorithms it uses, and in terms of the probability of the occurrence happening, and the kind of reporting you can do in real time. So that's what brings the excitement element to this whole thing.
Right, and that's very interesting. That you don't have to look at that. Since companies have to follow rules, and you can only build it around alerts and everything. But as you said, like there are a lot more areas which can help you actually utilize those rules to actually run the company better in a way, right? Or run the bank better. So that's a very interesting approach to look at innovation in this space. So to add to this, there are these traditional methods or mechanisms that have been going on, right? In your experience, what are the major innovations that you've already seen, in the last decade or so in the BFSI sector, which can kind of, inspire the founders to also understand that, there were these monoliths, there were these things that could not change as per the contemporary view, but then it has changed, and this is how it brought innovation in the system. So can you just give a couple of examples in that space?
Just think about the traditional way that banking used to be done, which was very in-person thing. You actually went to a bank, you met people and did that. That has moved completely to online and mobile and to new channels. With the advent of new channels, your complete experience is transformed, and you cannot imagine a millennial today walking into a bank and saying, I want ABC done. So the entire experience of not only selling us credit cards in real time to kind of like, let's say you go to a mall, and when you're in the mall, at the vicinity of a mall, you're geo-fenced and it says, do you want to go buy that bag or that t-shirt? I give you a 10% discount if you use our bank's credit card. So that is kind of what you never thought would happen, and it's happened. So it's the advent of new channels, new methodologies of interface, servicing through new channels such as social media, and it's more to a lot of regulation that's supported all of this happening. So you thought that banks were more like elephants can't dance. We have now seen that they not only can dance, they need to dance, and they need to dance a lot more. And banks need to kind of like, what's changed is like banks are trying to be innovators. And at times you often ask the question, do they need to be completely clued in on technology, or do they just need to take the support of the best in technology? Because if you kind of like say there's so much of innovation and technology experience that you bring onto a platform, let's say as a fintech, which would be years of innovation in a particular niche, do banks benefit more from utilizing that niche and bringing that on board, or do they have to be the core innovators in the sector? I think it comes back to the question of what are your core competencies, focus on that and outsource the rest of that to the players that know it best. So what we've seen is we didn't think all of that was going to happen. It's happened, and there's a lot more. So banks now will move on to a different realm where they could be the aggregator of even retail experience. You don't need to have a retailer doing retail when you can have a bank interface that enables not only to buy things, but also to pay for it or finance it, from buying a house to taking on a personal loan to kind of just giving those credit card related transactions. So you find that the user experience aspect is something that banks are focusing quite a bit, and they will continue to do more so. But I think what banks aren't currently doing a lot more of, and they should be doing off, is focus on the fundamentals, which is more on your core infrastructure in terms of technology. A case in point was the recent banking incident where, they had to shut for many days onboarding new customers simply because the infrastructure wasn't kind of like blanking out. You saw outages happening. So banks are more and more, few things we didn't think would happen was banks getting comfortable with regulation in this areas such as cloud adoption. And India was one of those countries that said no cloud at all for me, because it's kind of puts my customer data on the cloud is kind of a big thing, not going there. But now we see that more and more private sector banks are saying cloud adoption, and it's accelerated due to COVID. Because people did find that coming to the bank premises was no longer a viable option. And then you kind of say, if I had used a cloud, then these services could be done for me easier, cheaper in an OpEx model, and less time to market. So I think that those things which we thought that banks, because of regulation, wouldn't do are happening more and more. And technologies such as AI is being increasingly adopted as well, which is something that surprises as well, right? Because don't tell me that a machine can do something that I can do, right? That's something that people always think of. But AI is here to give you those data points that a human finds it hard to comprehend. Example, if I gave you 3,000 data points, you would say, I'm confused. There is an AI draws patterns from it and says, this is what it means. So that's where the power comes from a technology perspective.
Right. And I think that's very interesting point that, a lot of times we try to compete with technology, right? As humans, like we don't really need to compete. They are the tools that are built for us, right? And it ultimately helps do your job better. So a couple of points here that you mentioned, and I'll take it from there. There are 2 points that I really want you to address. One is regarding the customer experience or the customer side of things in terms of regulatory and compliance. Obviously, a big chunk might be at the back end or middle layer, but there would be some of the regulatory or compliance processes where the startups are building products, and their products are kind of front-ending the customer onboarding process, or they're collecting customer data directly, and then either it can be a payments app or a lending app, or it can be a neobank sort of an app, or a customer onboarding app for a bank ultimately. But what I mean to say is that a lot of information gets collected directly in the zone where they're connecting with the customers. So how do you see that aspect in terms of one, AI and technologies that can be used? Another is data privacy, which I'm sure, like, that's the big one to address. So how do you look at this aspect of regulatory and compliance, innovative startups or innovative solutions in this space?
So I think data privacy has to do with what you choose to be private, right? And if that being private, if you remember our Sundar Pichai's conversation with the Senate, one of the senators asks him, do you think you can track the fact that I moved from this desk to this desk? And he answers, yes, if you said my location services were on, then the answer would be yes. But that's not something that we ask you. Do you want that to be tracked or not? So more and more what is happening is that customers also need to be savvy on what they are giving away. They are, giving access to, are they giving that access to mom and pop shops? Are they reasonably secure that the data is going to be used the right way? That is something as a customer you have the right to ask. If you waive your rights away, then there is a certain manner in which the data can be used. And that's not really under anything you put in a GDPR also. It kind of says that, do you have access to data that you need or not? And do you sign or waive off certain rights? And when you're saying you waive off certain rights, and then you no longer can complain about those kind of things, right? So the second is the ethics around it. The second is the principle around it. And third is regulation. Regulation is more about compliance. Ethics is about how do you use the data? Even if you have access to the data, is it right that you're using it or not? So we'll come to the moral aspects of it, but from strictly when you ask a question, how is regulation built around it? Regulation asks you like a checkbox whether you are okay to get that data and how it's being used, the data. That is regulation. The ethics of it is how do you kind of morally, are you obligated to collect that? Is that in the right sense? So kind of let's separate the two out, and purely from a position of asking who goes through these new channels today. It's either the millennials that are not really aware of what the data is going to be used for, or it's people who won't get loans the traditional way. And therefore, they're looking at alternative channels. Or you're kind of thinking the time to market is less with these banks, and therefore I'm going to go with it. So in a strict parlance, when you ask why banks are collecting data, so far there's never been an incident reported that the bank used it for an incorrect way, right? So I think let's separate the two out and talk it purely from a sense of what you choose to waive off and why do you use it for certain things. And again, like banks have a corporate portfolio, there's an increasing attention to the retail portfolio and then the SME and other areas of it. So in retail is where you get a lot of the gray areas, and there is some more regulation happening around the retail space, and there needs to be an explanation of the fundamental rights of what you're waiving away and why you're using it for certain things. So a long answer to your question, but I thought it's important to kind of separate out compliance from ethics.
Right. No, that's very comprehensive. And before we move on to our next theme, there's a question that I wanted to ask as a customer, since as you would understand, like this, we have this slice of population that is using a lot of the apps that have come up, right? And they would be a bit more open to even the newer apps that are there, who would not garner the trust that a bank does, right? So we would be their first customers. Now, one thing that I have noticed, and this is in my limited exposure, what I feel is that when you want to use any app, so to say, like even beyond BFSI, things are made very easy for you regarding those apps features, right? But when it comes to those terms and conditions, that still looks like it looked in 1990s, right? I've always thought that why don't these apps also make it part of their UX or UI in a way that when I'm using the app for the first time, even these questions regarding data that we'll be tracking this and that, even that should be shown in very simple manner, and I can just say a yes or a no at the start itself through those 5-6 swipes, and that way at least I'll feel a bit more secure with these apps. So do you think even such maybe minor innovations can actually improve I would say the ethical side of things or the moral side of things when you're collecting data from the customers?
The answer is absolutely yes. Is it going to be done? It's still miles to go before we sleep. How many pages is our Indian Constitution? And do you think it was written just because it had to be easier, or was that because it had to be legally defensible? So I think there is more a component of why app makers make that. They are covering their aspect of should something happen, where is my use case and where do I have terms and conditions in it? Like the mutual fund, is that at your own discretion comes really fast. It doesn't come slow. It doesn't say if you invest, you could lose money. So I think that's more about what is fair from a customer side and what's fair from the other side, because 90% of the cases are the customer must be given the benefit of the doubt. There's no doubt about it. But you have cases when people spilled hot coffee and went back and sued the person and said, you know what, your coffee was too hot. So I think it's more a question of where you need to play, and ethics needs to remain on both sides of the equation. So
right.
That's where I would kind of stop at it. But yeah, absolutely. It cannot be 84 pages that you expect somebody to read. It's more like saying these are the 5-6 things that you are agreeing to give away. And by the way, There are other terms and conditions as part of these emails, which you can choose to really review or not, right? So
Yeah.
yeah.
Yeah, no, that's interesting. So we'll move on to the next theme. So Jay, as you're aware, a lot of startups that will be participating in the awards as well would be early stage startups, and most of them would be at the stage where either they are starting to think about going global, or ultimately within their business model they have to go global, right? They have to grow ultimately. So since as you said at the start that we've grown to 20 odd countries, and obviously clients would be across these regions, and again the regulatory regimes are also different. So how do you think a founder has to start thinking at the very start, like when they think of
Yeah.
going global? What should be their key steps that they have to take, because they have to deal with multiple regulatory regimes, and then also how different can the regulatory regimes be with which the founder might have to deal with in the long term as well?
See, I think regulatory regimes are more like, the principles of leading life, kind of moral campus. Thou shall not, covet their neighbors, whatever, thou shall not cheat, thou shall not do that. So I think most regulatory regimes form common themes. So from a perspective of saying, is that something that I'm creating that kind of takes into account local nuances, but broad-based, does it fit into the agenda of a global rollout? As in, does it have the principles that can be modified? Let me explain with one or two examples to drive home the point. Like even the NPA situation that we were talking about, it is to do with sense and respond. You're looking at different sources of data, you're doing something with it, you're analyzing it, it's an AI engine, you're drawing patterns, the algorithm sense risk, and it does the reporting. Now, what are the two elements, if you look at it, that is different between different countries? One is the availability of data. There could be kind of like a GDPR rule that says you can't draw data from ABC, or kind of like the reporting, if I take something from an ACC, from an RBI kind of a website or a short list of companies, I look at 10Ks and 10Qs, from a different website, or I'm using it from a different country. Sources of data are different, and the kind of reports needs to adhere to local norms. So that would have a variation of a max of 20 to 25% per country. And that's it. So you're not dealing with a whole lot of the processing. It's only the front and the reporting that will have minute changes, but overall, you need to see whether the bulk of your product is something that can be retrofitted for different countries. And you pick those adjacencies left by the global players. This is something that I would drive home a lot more for the early startups, because you have large, even if you look at the regulatory and risk scene, there are some big names that do bulk of the work. They are platform players, and they would say, ORM, here's what it is. If it is this kind of a reporting, this is what we do. But they don't solve the problem for everyone, because the people that can afford to spend millions of dollars would kind of say, okay, now I have a lot of manpower, I have a lot of resources. So let me kind of tweak this big platform and make it work for me, or co-innovate with those vendors. And the vendors also give attention to the top 5 of their customers. So I think it's more about figuring out, spend a lot of time before you put a product in on thinking whether it's a blue ocean strategy or a red ocean strategy. Even if it's a red ocean strategy, see where your play is. Otherwise, kind of spend a lot of time on strategizing and figuring out where is the applicability of this product. Is that going to be an in-country product, or do you have ambitions of going outside? Do you want to make it a non-prem product, or do you want to make it a cloud product? I don't think it's even a question now, because from an investor community, unless you're looking at ARR, you're no longer interesting. So I think it's more about how do you make that acceptable to be a cloud kind of a model with minimal customization as possible. And are you kind of like, do you really believe in the dream, and can you sell the dream to recruit employees? Because now talent is a big thing in this spectrum. And it's more about, Is that a long haul product? Are you looking at it in terms of an exit strategy, in terms of an IPO strategy? Are you kind of looking at making it big, scaling? What is your mechanism of it? What is your story? So everybody has a story, everybody has a vision, and kind of make that very clear, not only to yourself, but to the people you recruit. Because an entrepreneur or a startup in this journey is not selling a brand. He's selling a vision and a dream. And that is something that he needs to kind of be very clear and focused on what he's trying to get out of it and translate that into broad-based terms to employees and also to the investor community. So I think that's very, very cool. And fourth is stay focused, because there are going to be challenged. You're going to have challenges. You're going to have unanticipated things that are happening. Let's say, even if it's a regulation you thought was going to come in 2021 and you kind of built the product for it, then somebody announces it's not going to happen in 21, it's going to be 23. So what are you going to do from 21 to 23? So I think those kind of challenges and what you can keep the runway running, and how do you kind of keep that working capital flowing? How do you kind of take into account those kind of, short-term and longer-term, mid-term pressures is something that's challenging, but do stay the course. A long answer, but again, I thought it was important to emphasize those principles.
Right. No, definitely. In fact, we had a session yesterday with Rahul Chari, who's co-founded PhonePe. I think a couple of points, we had a similar question regarding the payment sector, but I think a couple of points are pretty exactly the same, especially the focus part. And as you said, that, at the start itself, you will have to, be very clear with the vision, whether it's a domestic product or global. And then if it's global, then there should be enough room to, as you said, to retrofit a lot of things and to build upon what you've already built. Which is an existing product. So Jaya, moving on a bit more towards a founder's perspective, or a perspective when you have to kind of engage with the clients as well. As I again said that these would be early stage founders. They would have some clients already, but then there is a point where you have to grow your company as well. And since you're leading BCT now, and you have a vast experience across other organizations as well. So when we come down to running the company as such, in the phase when you're scaling up, what are those key takeaways, or what would be the key learnings, 3 or 4, that you would want to share with the founders, that these are the things that you will have to do when you're scaling up your organization while the business gets going?
First thing I think is the big, elephant in the room would be recruitment. You're not recruiting employees. You're recruiting, founders or people who are part of that journey into making it big. I really liked Girish Mathrubudham's story. He said there needs to be a BMW in every employee that joins the company, right? That was something that he stated as, because he was fond of cars, and that was what he translated into saying that's what you need to see. So I think it's more about don't recruit talent and say, I want to recruit employees. You're recruiting people who are part of your journey and who are going to be instrumental in getting you to the next stage. So it needs to be people who are equally passionate about what you're building and have that entrepreneurial streak in you. So that is really important. Second is, I would probably take different stakeholders and give you said 3 points. So I'm going to talk from an employee hiring talent perspective. Second is more in terms of what you communicate with the investors, because they are very, very important from a startup perspective. And there are different stories to it. Some people say don't take funding early on. Some people say take funding early on. There are different issues to it. So you need to know how you want to run it. Do you have the funds to stay the course? Are you taking in investors because you need the money, or because you need that ecosystem they bring onto the table? And it's also kind of, it's complementary to where you're strong in and where you need to expand. So I think it's a lot of things. So be very discriminate when it comes to how you're diluting your equity. That's something that most startup founders kind of like don't have a clear plan. How much am I going to retain? When do I take them? In what stages do I take them? And where is it going to leave me with? Have clarity in terms of why you're taking on that and what they bring onto the table, and I would often say it's for the expertise, it's for the networks, it is for what they bring strategically as much as the actual funding that you get. So I think be aware of that and stay the course as far as that goes. And third is, I probably would say the third is most important. It's more about the strategic direction of where you want to be, which is that clear vision in which what you want to do. Because when you're a startup, what happens often is you go where the money is, and you have a vision of a product and somebody else says, hey, why don't you do this project for us? And then you kind of say, okay, I need to kind of pay my rents for the next month, and you kind of go off that course and come back. And that's the tendency most startup founders would have, because you kind of like say, am I doing the right thing? Don't question that. While the course may be tough, I would say still keep the course, but make sure that what you have in terms of a vision is broad-based enough that it is scalable across countries. It's a product that's a niche. It's got enough meat that it actually can stand up on its own in its entirety. Spend time on the strategy, spend time on figuring out if it's the right thing to do. And it's okay to change course, but it needs to be an calculated risk reward kind of a measurement. If you make a mistake, it's okay to roll back, but you need to kind of say that this is where, the rest of the world has moved and I've missed the boat, and therefore I need to shift, rather than kind of keep shifting courses, because it confuses your investors, it confuses your employees, it confuses yourself, and those are the reasons startups fail.
Right. I think this specific answer, I think that we'll definitely use this clip separately as well. I think this applies to founders across the board, and it will be a very important lesson for everyone. So moving deeper into the regulation part or the compliance part, Jaya. So regulation has been changing, right? There are big shifts like after 2008, or we'll be soon looking at SOFR instead of LIBOR. And then there'll be smaller changes at the domestic level in each of the countries or a region also. So obviously we can't control regulations as such, but how is the compliance of these existing regulations changing in terms of technology and in terms of how industries are taking it up?
So like I said, compliance is getting to be more shorter. As in earlier, you could have had 3 months to kind of comply with certain regulation and the reporting. Now, regulators are getting more savvy, because once, the impact of a small data breach is enormous and has far-reaching consequences. So I think it's getting more real time. It's getting more in terms of in the moment, rather than something that can wait for a longer time. So that's a big thing. And regulators were generally more earlier, more wait and watch. Let's wait and watch what's happening, and then let's bring something that's a regulation, which was always post-mortem. Now, there is more, there's more awareness, and there is more focus on technological innovation usage in terms of regulation as well. I'll give you examples. Like the sandbox and things like that, you would have never thought that came from a regulator. This would be something that you would have said as startups, they would have pushed and asked for years, and finally something would have been granted. But now they are all creating that environment. I mean, we'll come back to whether it's effective or not. There are ways, I would probably say not as effective as it should be, but it's more that the spin from regulators to saying, let me also be innovative, let me also kind of look at reading more, let me look at what's happening outside and bring that to it. Example again would be cryptocurrency, and I'm just using that in a wider sense because cryptocurrency is supposed to be by nature unregulated. But even then, RBI is kind of talking about saying, what do you bring in it? What are the things? Why are we worried about it? What is the AML consequences of a cryptocurrency? So there's a lot of thought, understanding of even newer areas and realms of business. So that is a fundamental shift. Third, I would say in countries like India, for instance, NPA, we were far ahead of a lot more regimes outside the world. So what India came up with the working paper for NPAs, for instance, That was followed by APRA's guideline that said you must have an early warning system in place, or EBA or OCC. So in certain areas where we fundamentally have a problem, the regulation has come out quite in advance and kind of anticipated the event and kind of worked on it. But there still seems to be miles to go before we sleep. And there's a lot of acceptance again for technology. So that's kind of how I would summarize it.
Right, and just to add on to it, since we've been working with a lot of corporates in terms of open innovation, I can vouch in terms of IRDA or RBI or Indian regulators, right? They have been surprisingly very active in terms of accepting or adopting technology, as well as you said, like creating sandboxes. Obviously, there is enough room for improvement in all those models. But it's very heartening to see when regulators themselves are coming forward and figuring out what can be the best next steps in these cases.
And they're reaching out to people. They want to understand more. It's more in terms of like, oh, that's a good paper that you put out. What is the nuances of that? So the reach out in terms of understanding, the reach out in terms of adapting to newer age technologies, and the whole let me be ahead of the curve kind of a game is very heartening to do.
Right. So we have one question from Murli Jaya, and it's an interesting one. I think it can be a good case study as well. So a SaaS provider based out of India simply collects name and email addresses for the reason of blacklisting offenders. Then the data is in a servers based out of India. Users can be anywhere. In such a situation, how is the law of the land where the offender is based at? I think what he wants to understand is that the servers can be in a different area, the customers can be of a different country, and then company can be Indian, right? So how do they navigate this sort of a regulatory arrangement?
See, I think it comes to, again, going back to what you said, terms and conditions. Pretty much in the contract, there would be a clause says jurisdiction is based in where the most favorable location in terms of laws. Let's say that the provider or the vendor is Indian, most likely the jurisdiction would not even be India. It would probably be Mumbai or Surat or whatever, right? And the jurisdiction is never where the user is based. That's pretty much how most of the contracts are written. But usually you see that in the contract or the terms and conditions or simply collecting emails. Before that, there should be a term sheet or something of that sort. But if there is nothing that's been collected, you can assume safely it's where the vendor's headquarters is located.
Right. Makes sense. I would request all our attendees also to share more questions, because we'll be taking up audience questions for these 10 to 15 minutes now. And Jeb, till the time we get more questions, just a couple of points from you regarding how the founders who would have scaled up, and as well as they would have a clear vision, a product that is working well. And now after scaling up, there would be newer areas where they can start looking at. So what would be these white spaces in this industry where you are in, where you can claim that, we still have a lot of room of innovation in these X, Y, or Z areas in terms of regulatory and compliance within the BFSI segment?
So there's loads of it. I know you've been interviewing payments providers. So when you look at it, payments moved from physical to digital and digital to mobile. So there's a lot more room to go even in that space. So now when you look at the RegTech space as an example, RegTech is very interesting because A, it's anti-cyclical, and second, regulations never stop. So it is something that keeps coming, and you can never run out of ideas in this business. So that's the best part of saying why RegTech. It could be construed as boring, but it's not boring because something keeps happening. So I think you're as new as the latest regulation. So let me explain probably with an example of how we grew, right? One, we started with the NPA thing, which was our first product. And for instance, the COVID crisis has itself brought in a lot of opportunity, if you will, in the space, because what's happened is that it is an event, it's a black swan event, nobody would have forecasted. So now if you look at, is there any data such as this? There's no data that, when such an event happened, how do you work with predictability models? You can't, because all the old models are gone out of date. So you can work a little bit with the AI trained data that is focused on the last 2 years and how that's happened. So for example, when the crisis hit, right, most companies in their annual reports had to say this is the loss due to our COVID crisis, right? And most of that was not quantified. So we came up with a product that said we will help you quantify the losses. As in, if a vaccine, if you were back to business in March of 2021 versus 22, or in the last December of 2022, here's how you would look like. And that would be based on things such as your accounts payable, accounts receivable, commodity availability, supply chain disruptions, amongst other parameters, your kind of exposure to different sectors. All sectors now, it's a K-shaped recovery because all of them are going at different curves. So let's say a bank or an institution has more exposure to a certain industry, or even if it's a corporate that's dependent on multiple sectors, we could model that and come up with a quantifiable model with certainty on your revenue stream. That is a new product, and that came out of a complete, response to a crisis. How do you kind of help businesses have the predictability quotient nailed down, right? And then work on improvements and say, if I improved ABC parameter, then maybe the revenue stream will be better. So I need not focus on, these 6 variables. I'm going to focus on 24 other variables. So I think that was something that we come up with. Post-crisis, that is being used as, widely in different geographies for model risk management. So that model of the COVID model was something that can be adapted to real life models in different scenarios. So I think that's a white space if you would look at. So even in terms of like cybersecurity risks boomed during the COVID crisis. So because everything became digital, but they didn't have the required measures in place. So how do you kind of make sure your GRC includes those cybersecurity risks, and how do you kind of mitigate that? That was another product that we launched. So I'm just giving you examples of how you can kind of take a base product and then kind of use it for different models and keep watching out for what's happening next and model your products to get there.
Right. No, very interesting. You have to keep at it. As you said, like regulations are changing, right? It will be a bit different from any other, subsector in a way. Like you can come up with ideas as such in payments or wealth management, or there can be a lot of things that can come out of the blue just by the experience. But I think in regulatory or compliance, it most probably will depend a bit more on what regulations are being, made rather than just novice ideas, right? It'll depend on the regime a lot.
An example, even for GRCs, there was a new thing around IoT devices. So there was a new, some of the guideline papers around IoT. So if you do GRC for an IoT was a new segment we'd launched, where we said this makes sense. So I'm talking about just horizontal expansion capabilities. You could look at it in terms of vertical capabilities as well. So if I'm saying my NPA is sense and response, and it's fitting in a compliance regulation from an RBI perspective, I can take that to the power industry as well. I could say, here is what I'm sensing from these. Here is what my analysis AI. I could give a predictive pattern in terms of plant maintenance. And here is the reporting you need to report from saying, I'm compliant. Do I produce enough power? What is kind of like my variability of power going to be? And that would help from an energy trading perspective. I'm just giving either it's across industries or within an industry, you kind of go from one segment to the other as long as it remains a blue ocean kind of thing.
Right. No, that's a brilliant point actually. That in if you have solutions in the regulatory space, as you rightly said, you can actually go across the industry itself. So opportunities are far more than any other sort of segment, I would say.
The same thing goes with logistics, which is very interesting because the logistics segment, again, driver fatigue, health and safety, there's a whole bunch of compliance. It again follows sense and respond. And what do you do with it? AI models, algo, all of that. If he breaks X number of times, that means that he's actually not focusing enough. Or, those kind of things would come into a parlance. So you can use it across multiple industries. with the same kind of an algorithm, and it still is compliance. It's different compliance, either across geographies or it's across industries. It depends on where you want to pivot and take the company forward. It should not get confusing as long as you can explain the story in terms of what you did, what's the variability. You could either take it across geographies or expand if you want to remain in country within verticals as well.
Right. No, very interesting point. And as you said, geography. So Arihant has a question, and I think it's a very specific one. That which country would be the next or the first base outside India for an Indian startup, or in other words, are there any countries which have similar financial regulations or compliance perspective, so that it's easy for an Indian startup to find their first base outside India?
So I think if you look at it, there is two things you do. It depends on the objective of the startup. Like, for instance, I can give our example. We modeled it on an NPA. So we could have kind of said, where is NPA highest, and therefore which countries do I go to? And therefore, if I want to pick Greece or Cyprus, that would have been a logical example. Second is, where exactly is this regulation happening? Like APRA, Australia came up with exactly something similar to EWS, the RBI working paper, and said it's going to roll it out to the banks. So either you follow the regulation across the world geography, or you kind of follow the problem across the world and create a market need and say you have high NPAs, this is what you could do with it. So that is one example of it. And it depends on what product you serve, and follow the path in terms of direct applicability of either a compliance, direct applicability of the product, or direct applicability of the problem. So those are the vectors that I would probably talk about in terms of scaling. And second is, sometimes you don't have a choice. It depends on, let's say that you are a startup that's taken investor funding. It may just follow that, let's say your investor is Silicon Valley based. He brings with him a network in the Silicon Valley and the US, and he can open doors in a particular geography. It just makes it easier to follow the path of the investor and kind of go with where the contacts reside. It could also be something that is where you think it's a prominent play in terms of underserved markets. And then you go and pick that and say, you know what, let's say my competition is not playing in those segments. And that is something that I can open doors through a contact or a really good channel partner that can open it up for me. So there are multiple answers to it. And it's often, if you're taking investor money, it's probably also driven by large by that.
Right. No, perfect. And as we come to the last few minutes, just wanted to share with the audience that we are organizing NASSCOM India FinTech Awards, where we are recognizing early stage startups. By early stage, we mean the startups who would have founded on or after 1st Jan 2018 in 6 segments. One of the segments is regulatory and compliance tech, which we have discussed today. I'm sharing the link for all the details that you would need for the awards in the chat itself, so you can check out. And Jaya, to conclude the session, there's one question that came up in the last session from the audience, and I thought this is a good question to conclude a session. So the question was that in your experience, what are your I think what are the things that keep you going in these turbulent times, so to say, and with all the business issues that come up in daily life, and also which are the entrepreneurs that you look up to? I think this would be very interesting for everyone to understand.
Sure. I think the first thing for me is that learning never stops. I love learning. To me, that is something that's been my strongest mantra. I think it's more about reading more, learning more. So I would say the culture of learning has been my strongest theme throughout the years. And it's also, whatever you do, be very passionate about whatever you do. It could be something very simple that you do, but that is something that has to reflect and say that I firmly believe in this and I'm going to get it no matter what. I think the passion, the drive, and the learning are the strongest themes, if you ask me. That keeps me going. And third is the commitment, because as an entrepreneur, it's not just your life that's at risk. you've kind of, careers of so many people are hedged upon the way or the direction in which you're going. So I think it's more the responsibility and commitment that you carry, that all of these continue to be propelling, and you often need to ask the ethical question, which is more in terms of, you could take a break, but is that something that's going to kind of like be the right thing to do in terms of the rest of the people that you've brought along with you on that direction? In terms of entrepreneurs, I look up, obviously, there are so many on a global level, and there are so many unicorns even on an Indian level. So let me pick what Kunal Shah, for instance, has done, what Oyo has done, what Byju's has done. There's so many things that they've been the first to go to market. Freshworks, Girish, I think coming from a humble background into listing on, the first company to be listed in the US. Those are all things that we often look up to. Often we've taken role models outside and kind of thought that I wish I could reach there. Now you can. That makes the difference.
No, that's actually brilliant. We always we always need new role models, right? With time, with changing times, and the folks who are innovating now, they would be considered, I would say, more valuable. Like their experiences or their insights would be considered more valuable than maybe even the veterans in certain areas, right? So we should always kind of respect that innovation that they're bringing in the system or in the ecosystem.
This is more tangible. This is something that you can touch and feel. This is something that you see, oh, if he could do it, I could do it. Whereas there, it was more like, halo around and saying that it seems like a far-fetched dream, right? So I think this is all great for India.
Right. In fact, yeah, I think the way you put it at the last, like, it reminds me of a lot of folks who are now obviously, their companies are big now. And 2 or 3 years ago, I had met them at the conference, and we were discussing on how they are starting up, or they just made the product and they want to connect with some corporates. And now I'm calling a lot of them as speakers for some of these sessions, right? Mm-hmm. So it's really great to see such role models. At the end, we've got a comment from Murli, who says excellent and very straightforward talk. So thanks, Murli, for that compliment. Yeah, great. So Jaya, thanks for joining in. This was a wonderful session, and I'm sure everyone got to learn a lot of things regarding the segment, as well as your thoughts on how to run the business in this segment as well. We will be picking up a lot of these bites and sharing with our audience across the board, in all the channels. And again, just to remind our audiences, you can check out the segments that are there in India FinTech Awards, and you can apply for the same for a lot of these connects for investors and startups and corporates, and we can help you with your journey in the space. So Jaya, thank you so much for joining in.
Thank you.
It was a pleasure hosting you, and we'll definitely plan more sessions with you in this segment.
Thank you so much. Pleasure talking to you.
Great. Thank you so much. Thanks.